This is Real Tax, Real Insights, straight talk from the EY Center for Tax Policy in Washington, D.C., where we break down the tax policy developments that matter to your business. Today, we'll focus on state tax developments after the enactment of federal tax legislation this past summer. How are states reacting to that legislation, and what trends are we seeing, and where are the opportunities for engagement? Joining me today is Jess Morgan. Jess is a senior manager in our National Tax Department focusing primarily on state tax policies, helping businesses plan for the state and local tax impacts of strategic transactions and global economic developments. Jess, it's great to have you. Let's get started. First question, what should businesses know about how the states are reacting to the federal tax legislation?
Well, Jose, timing is everything. What's really interesting is that by the time the federal legislation was enacted, most states had already finalized their current year budgets. So conformity brings with it an immediate state tax priority around fiscal solvency. So when we think about, in particular, the policies that are very favorable to businesses and their expensing provisions, things like research and experimentation deductions, immediate expensing for qualified property, conformity to those types of provisions brings with it an immediate budget concern. So we see states turning to decoupling and other mechanisms to slow down the effects of changes to those provisions that were otherwise going to expire under the TCJA. In some tax policy circles, we think about that in terms of a whack-a-mole game. So Washington raises up their federal tax policy machine, and the states sort of selectively address each of those provisions as they pop up.
So you mentioned decoupling, and that might be easier than actually cutting spending, redoing your budgets. Is decoupling a nationwide trend?
Very much so. I would even say that we are witnessing a paradigm shift in state income taxation. And that's because lawmakers are not only considering whether to decouple, but they're looking at new and novel ways as to how they decouple. So I would say a year ago even, you could have compared federal and state tax policies to looking through a kaleidoscope. Maybe your first glance through that lens shows you a certain pattern of federal income and deduction policies, but state lawmakers would regularly sort of adjust those kinds of income and deduction policies. You glance back through, you see a different pattern. What's happening more recently is states are looking, as I said, at these new and novel mechanisms for decoupling or selectively conforming to federal tax policy changes. We've even seen in some cases additional authority conferred on state tax administrators, not only to study the effects of these changes, but also to suggest conformity decisions for lawmakers going forward.
So looking further out, like what's the state tax policy outlook for 2026? And then maybe more importantly, how can business engage in that process?
Well, 2026 is going to be a big year legislatively. All but 4 states have regularly scheduled sessions. And in addition to that, we can't forget that November of 26 means that thousands of our state legislative seats will be up for election. And at the same time, we have more than 2/3 of states' governors are going to be elected as well. Some of those have been term limited, so we're going to see brand new executives in those positions. They might bring with them new state tax policies, even new state tax administrators in some case. And we can't forget administration. We've seen an outpouring of guidance as it relates to how the states and the compliance and reporting obligations of taxpayers are going to be affected by the One Big Beautiful Bill Act. So this is at a time when tax administrators are also considering impacts of other federal policy changes. Certainly the monetary decision not to mint the penny any longer has implications for sales taxes and sales tax collections. But businesses have an opportunity to participate not only in conversations with our tax administrators, but also with lawmakers, participating in the understanding of the federal tax policies and how they're impacting the states and the businesses that are acting therein.
So a lot of activity. As we've seen on the federal side, engagement is very important early and often. I think it's equally important on the state side.
That's right. It's an exciting year for state and local tax, Jose.
So Jess, thanks for joining us today and thanks for sharing your insights. And thank you for tuning in to this episode of Real Tax, Real Insights. Keep an eye out for more episodes featuring leaders from the EY Center for Tax Policy as they unpack today's most pressing tax issues.